Good morning, members. We welcome you all on a very important topic, the recent changes in the tax audit guidelines and a very important case studies on which today we are going to have the panel discussions. So before we start our today's sessions, first we would like to run our institute motto song. So we'll play our motto. We request all the members to please rise at the place.
येष सुप्तेषु जागृति येष सुप्तेषु जागृति कामं 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 कामंशो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्द्वैता 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 एतद्द्वैता.
Thank you, members. Now we'll play our national anthem. So we again request our members to please. Thank you. So as I was discussing, today we are on the very important topic, that is on the recent changes in the guidelines of the tax audit and the panel discussions on the important case studies. Sir, we at JB Nagar CPA Study Circle, we are very fortunate. So our tagline for the year is grab the opportunity and learn. And every month, whenever we plan a very important topic and we approach the best faculties of our fraternity, so we just to have the first hand informations, all the senior faculties always help us and gives us consensus to attend or to take the sessions. So today also we have with us as a first speaker and a respected Central Council member, CA Chandrashekhar Chital sir with us He has taken a lot of efforts and has given us his valuable time. He landed yesterday night only today. So we have the sessions today at early morning. So thank you very much, Chital sir, for being with us. Second panelist we have with us C. Harish Motiwala sir, very senior person from our profession. We also welcome you, sir. We also recognize the presence of our past WRC chairman C. Lalit Bajaj sir. Thank you, sir. We recognize your presence. Our third panelist C. Darshak Bhai Shah is also going to join us very soon. Now to start the today's sessions and to have the formal introductions, I would like to invite C. Atul Mathuria ji to formally introduce the today's speakers.
Good morning. It's my great pleasure to introduce our two learned speakers today. Our Central Council member, Shri Chandrashekhar Chital, is Jayesh Bhai is told, he has specially come for us to guide us exactly what these new guidelines of tax audit is. He was the main person after that for publishing, and he is a practicing chartered accountant and senior partner of CV Chital and Company, member of Central Council of Institute of India, and chairman of Direct Taxes Committee and chairman of Peer Review Board. He is a former chair Corporate Law, Corporate and Governance Committee, and former vice chairman of Committee of Public and Governance, Finance, Management and Management Accounting Committee. He is member of various standing committee and non-standing committee, including Direct Taxation Committee, Indirect Taxation Committee, Valuation Standard Board, Accounting Standard Board, Auditing Assurance Standard Board, Internal Audit Standard Board, etc. He had been a member, managing committee of Pune branch of the Institute of Chartered Accountant of India, and was chairman of Pune branch of ICAI for year 88-89. He has been vice president of Pune Chartered Accountant Society during 97 to 99. He was chairman of Direct Tax Committee of MCCIA Pune branch and Maharashtra Chamber of Commerce, Industry and Agriculture, Mumbai. He was treasurer of Maharashtra Chamber of Commerce, Industries, Agricultural during 2002 to 8 and 2012 to 18. He was nominated for Cost Accounting Standard Board on the Cost Audit and Assurance Standard Board of the Institute of Cost Accountant of India. He was nominated on a committee of the ICI to prepare representation on Direct Tax for 2010. Was member of a group constituted by IFRS Implementation Committee of the ICI on compilation of study material. He has contributed draft text books which have been adopted by the study material for the intermediate and final curriculum of the Institute of Cost Accountant of India. He has written several articles in newspaper and periodicals, including the Economic Times, Chartered Accountants Journal, Management Accountant, Taxman, Sampada, Sakal Maharashtra Times, and Lok Satta. With this introduction, I request all the members to please welcome him with loud applause. Coming to very senior Chartered Accountant Shri Harish Bhai Motiwala. He is a FCA, LLB and DISA and practicing as a Chartered Accountant, senior partner of Mr. Chhajad and Doshi. He is a former president of Bombay Chartered Accountant Society, past chairman of Western India Regional Council of Institute of CA, Central Council member of the Institute of Chartered Accountant of India for 9 years. He was Secretary General of All India Federation of Tax Practitioners. He has co-authored for many books like Tax Audit Manual, tax deducted at source and law in practice published by Wadhwa and Company, guidance note on tax audit under section 44AB of Income Tax Act, issue of tax audit, history of the accounting profession in India, volume 123, published by CA Institute. He has contributed several articles on the subject of taxation and committee finance and delivered talks on various fora. He has been on board of various listed and unlisted companies. With this few words, I request all the members to welcome me. We will have very good and very interactive session today. Initially, Chital sir will introduce us to the new guidance note, and then we will have a kind of a panel discussion with 3 panelists. It would be quite interactive. Before we start the session, I request to hand over memento to our learned speaker as a mark of our love and affection. I request Shri Jayesh Bhai to hand over memento to Chital sir. I request Hemant Bhai Gandhi, our core group member, to hand over memento to Shri Harish Bhai. Now I request Chital sir to take over.
Good morning, friend. Good morning, friends. Conveners of the study circle, Jayesh and Purvi, learned faculty members, Harish Bhai, Shah sir, on dais, Jayesh Bhai and Atul Bhai, and my good friend, former chairman, Regional Council, and all of you chartered accountants being members of the profession. It's indeed a pleasure to be with you and discuss some of the aspects relating to guidance note. Considering paucity of time and expanse of subject, let me come straight away to the topic. As you are aware that the tax audit due date is on 30th of September, and we at Direct Tax Committee have taken a view that Institute of Chartered Accountants of India shall not apply for extension, because for various reasons it is counterproductive for the profession. Basically, when we go to CBDT, they ask what is the damage to the profession, because the costs and consequences are there for the assessee fraternity and not for the profession. So let them represent. We tried to request some chambers of commerce, but we were responded that no, we want to be in good books of CBDT. You may please represent. And then secondly, there are other institutions who are canvassing for tax audit, like Institute of Cost Accountants of India. They want to do tax audit, and one of the justification is because the extension is being sought, the number of chartered accountants is deficient to carry out the tax audit. So there is need that other professionals should be interested. And besides this institute, even Institute of Company Secretaries also is making such representation. So there is no point for ICI to make representation. And thirdly, it is counterproductive from long-term interests of the profession that if the due date is extended, the work expands, the expenditure increases, the fees remain stationary, and the contribution reduces. And you don't have time to attend such meetings and even for leisure. So for these reasons, it was thought fit that we will not apply for extension, only with a caveat, and we have written that to CBDT, that you should come out with forms and schema by first week of April. And whatever schema you are adopting, that should be stationary for the period till 31st of July at least. And if you want to change, maybe on first week of August, you can change, which should be again stationary till 30th of September. Our part, we are fulfilling. Their part, to an extent, it is fulfilled. To an extent, it is outstanding. Let us hope that in due course of time, they will also come online. Coming to this guidance note, as you are aware that almost each firm of chartered accountants, if not each partner, at least each firm is conducting this assignment of tax audit. And it is therefore necessary that there should be some authoritative publication from the ICAI. Since 1984, successive guidance notes were issued. Harish Bhai also was contributory to some of the guidance notes and also guide. But since 2014, this guidance note was not revised. Therefore, it was thought appropriate that let us revise it and bring all the information relating to conduct of tax audit at one place. So after 7 editions till 2014, now this is the 8th edition. But there is one distinction between all those 7 editions and this 8th edition. Those 7 editions have a title that Guidance Note on Tax Audit under Section 44AB of the Income Tax Act. That title is continued, but with a suffix that assessment year 2022-23. Thereby, we want to have a responsibility on Direct Tax Committee that annually it should be revised. And once revised, we should not keep it as it is for a few years. Only in council deliberations, it was stated that this guidance note is process driven. It is a piece of mandate from institute, so to say, although it is a guidance. The committee has to propose, it has to go to council, then 30 days public exposure, again consider the comments, again go to the council. So it takes at least a process of 3 to 3.5 months. So once the budget is announced and say in the first week of April, the forms are in place, it will take at least 3 to 3.5 years. So after this assessment year 22-23, one more line has been added that unless there is any change, so and onwards, unless there is change by act, administration, or by judiciary. Of course, we hope that annually it will be revised. Maybe if not in May, maybe by end of June, it should be available. But this is as far as this particular guidance note is concerned. Then, in order to contain the size of this guidance note, it should not become very bulky. There are certain aspects which are taken care of by other publications and in more elaborate manner, like accounting standards, standards on auditing, income competition on disclosure standards. So rather than giving some summary of it, which will be of no much use for a practitioner, he will have an idea about the subject, but not really the knowledge. So wherever reference is required for accounting standards, standards on auditing or ICDS, we have invited attention to respective publication, and we have also given a website where those publications would be available. So that has curtailed some volume of this guidance note. Thirdly, when we started drafting guidance note, there was one trade-off before us: rule versus schema. As you are aware, that Form 3CD is available in income tax rules. It is also available in schema. Ideally, whatever is available in rules should be available in the schema. But when we noticed and compare changes between or variations between two set of forms. So question was on what guidance note should be restricting. There, as you are aware, as far as rules are concerned, rules are part of legislation. Schema is concerned, it is an administrative action. It is not having sanction of law as such, because these rules are issued for tax audit under section by authority given to the CBDT under section 44AB, read with section 119, etc. So CBDT has an authority to issue rules, to draft forms. Utilizing this power, they have issued that rule 6G, given form 3CA, 3CV, 3CD. Whenever any rule is issued, form is issued, it is placed before the parliament, both the houses of parliament, for 30 days. And thereafter it gets confirmed. So there is elaborate process of law behind the rules and the forms issued under the rules. As far as schema is concerned, under Rule 12, they are saying that, okay, CBDT can have those forms for electronic filing. And while doing so, they can consider the drafting of that form in such a manner that, okay, in certain boxes, the information should come. And accordingly, they have issued the schema. The schema is therefore not having that sanction of law as the form given under the rules. So the guidance note restricts its comments only to the form which is given in the income tax rules and not in the schema. The minor differences, although we say minor, they may result into some major consequences. Take example of clause 27A, 38, 39. In clause 27A, the question in rules, the form available in rules is about the Senvat credit under the central excise law. And if you go to the form in the schema, there is also mention of GST and input tax credit. Similarly, in 38, 39, it is talking about audit under excise, service tax audit. So GST is not mentioned in the form which is given under the rules. So the commentary is given only qua Senvat credit under central excise law, and nothing has been discussed about input tax credit. Meaning thereby, if in issuing tax audit report, if a chartered accountant does not mention anything about input tax credit under GST, there would not be any transgression of law. He would be complying with the law, because whatever is given in the rules, that form he is following. Rules do not ask GST credit, we have not mentioned it. And that way we have proceeded in the rules. From some quarters, there was an issue that fine, after I comment only on excise Senvat credit, I answer nil, whatever. And then it is also my responsibility to furnish that particular form under the schema. And in schema, I digitally sign the form. And in schema, the word GST and input tax credit is there. So if my answer relating to excise may not be appropriate with those wordings, so would I be responsible? And there we believe that a chartered accountant restricting his comments on excise and digitally signing the form in schema where GST word is there, input tax credit word is there, he would not be at fault. For the reason that courts have held that assessee is not expected to perform impossible. And there are various judgments. Some of them we have mentioned. So in case of Life Insurance Corporation of India versus CIT 219 ITR page 410, where the Supreme Court has gone on record to say the assessee is not expected to perform impossible. That was the first year of nationalization of Life Insurance Corporation. And in Schedule 2, Rule 2B, there is one deduction which is available from competition of actuarial gains. They say that whatever actuarial gains are calculated for the year, maybe the part which is already considered in earlier years, that need not be once again included. For that, you get the deduction. And that deduction was claimed by the corporation, but the assessing officer said that, no, you were not last year the corporation, you were company. So this year it is not applicable to you. And then the issue went till the Supreme Court. Supreme Court allowed that deduction even if there was no corporation in earlier year. And in that context, Supreme Court has this observation that the assessee is not expected to perform impossible. There are other judgments also. So auditor or chartered accountant, he has performed a tax audit as per the mandate given under the forms. And now it is his responsibility under the rules that that particular form should be uploaded. Now, for the purpose of uploading that form with the words which are available in the rules, is it possible? It is not possible because he cannot omit those words from the form. There is no other mechanism that the form is furnished to the income tax department. So even if he digitally signs that schema having the words GST, input tax credit, and answers only with respect to the form which is available in the rules, we believe that he will not be at an error and he would be in compliance because he is not expected to perform impossible. So this is one aspect that we have dealt with. Then another aspect is issuing tax audit report versus uploading tax audit report. Because what is observed that in number of cases, the tax audit report is uploaded, it is digitally signed, and it is taken as the tax audit report having been issued. So there we need to reconsider whether that amounts to issuing of a tax audit report. Because as far as tax audit is concerned, there is no responsibility on a chartered accountant if you read the act. Under section 44AB, it says that if any assessee having turnover more than 1 crore, having business income more than, business receipts more than 1 crore, profession 50 lakh, etc., etc., he should get his accounts audited from an accountant under section 288 and furnish it to the income tax department. So then the assessee comes to the chartered accountant and he asks for the report. This process is there since 1984. So what we used to do since 1984, that tax audit was conducted. A form was, hard copy was issued because at that time there was no soft copies requirement. That was signed, stamped by the chartered accountant and given to the client or assessee, and assessee used to furnish it to the income tax department. So that was the process which was followed. With the advent of e-technology, this physical furnishing has been substituted by e-furnishing. So the process given in e-furnishing is, and that is responsibility of the assessee to furnish. But although it is responsibility of the assessee to furnish, the mechanism which is adopted by the CBDT is the chartered accountant who has issued that tax audit report shall input whatever is written in that tax audit report in this particular schema, and he shall digitally sign it as a note of approval, and then the assessee will accept it. So the procedure has been changed from physical filing to e-filing, but the fact that it is to be issued and then furnished, there is no change in this particular procedure. So we have advised that tax audit report should be issued first and then it should be uploaded. So the aspect that about GST credit not being mentioned, etc., that may get clarified, because in that form you can reproduce the form exactly as per Rule 60, which is available in the income tax forms, and that will not have those words. Thirdly, about issuing, it is also stated that it should be issued in a hard copy. You should take printout, because it says that you should sign, you should stamp it. So both these things can be performed. There were representations that now this is electronic era. So even balance sheets are signed on soft copy form. So there we have said that, okay, besides hard copy, you can issue this report also in soft copy and digitally sign it. So both processes are possible, and that we have stated in the guidance note. Then coming to qualification, disqualification, at times it is seen that it is not seriously checked by a chartered accountant whether he is eligible, ineligible. And their definition under section 288 of an accountant about eligibility, ineligibility, or qualifications, disqualifications has undergone certain change in last few years. Code of ethics also talk about qualifications, disqualifications. So that has to be seen. In case of code of ethics, if chartered accountant is indebted to the client, then he is disqualified, or this disqualification is not attracted if that indebtedness is up to 1 lakh rupees. So if you are indebted for 90,000 rupees, you still continue to be eligible to do the audit. But when it comes to section 288, it says that if accountant is indebted to the client, he is ineligible. So even if 10 rupees you are indebted, you are eligible. So stricter condition will prevail. And particularly attention needs to be invited to one important disqualification in the Income Tax Act, section 288, is if you are having business relationship with the client, then you are not eligible to do the audit. Rule 51A is also enacted to give certain concessions. And it says that, okay, if you are having business relationship on at par basis, that is no special concession is given to you in certain industries, like say telecommunication, hospitality, transportation, etc., then that need not be considered as a business relationship. So if you are using cell phone of Airtel and you are charged as per the scheme which is available to all the customers, then although you are having business relationship with Airtel, then you are still continue to be eligible. But if Airtel is given you some concession because of whatever business relationship, then you will be ineligible. But in other cases, one will have to really check whether such business relationship exists, and there whether you are dealing it on say arm's length or not on arm's length, that is not the issue, or that is not the qualification condition that has been put. So particularly supposing some chartered accountant is constructing premises, or maybe he's purchasing apartment from contractor or builder, and then he is appointed as an auditor by that particular contractor or a builder, whether he would be eligible to do the audit, that will be a cause of concern. One will have to really examine. Similarly, if you have taken any supplies, if there is marriage or other function in your family, and you have engaged some contractor, catering contractor, and you are doing his tax audit, I think all those things one will have to once again review in the light of section 288 disqualification and this particular rule 51E. At times, clients take stand that 3CD you have to issue. It is not my responsibility, because it says that you obtain report and then I have to furnish. So in order to answer this argument, we have specifically stated that like financial statements, the draft of Form 3CD contents all particulars, etc., is to be furnished to the chartered accountant by the client. So it is the responsibility of the client to furnish draft Form 3CD, and then for a chartered accountant to audit it and to submit it to the income tax department. So that has clearly been stated in it. So these are some of the preliminary distinguishing features as far as this guidance note is concerned. Coming to contents of the form, it is noticed that particularly as far as Form 3CB is concerned, Form 3CB has two certifications. One is about the true and fair view of such that entity under audit, and then true and correct Form 3CD. ICAI has issued one standard on auditing, SA 700. SA 700 gives a report of audit, and there 2 paragraphs are required to be mandatorily included in the audit report, and that is the account finance are maintained by the assessee, financial statements are prepared by the assessee, accounting policies, etc., is the assessee's outlook, etc. So responsibility of producing financial statement rests with the assessee. And what we have done is applying the usual auditing procedures, auditing standards, we have conducted the audit. It was noticed that in a number of tax audit reports, these 2 forms were missing. If those 2 forms are, if these 2 paragraphs are not there, and if anybody has cared to read the contribution made by Harish Motiwala about code of ethics and other things, I think he will understand that this is not in keeping with the mandate given by the ICAI, and he may be held as guilty of being negligent. What happens at times, it is not noticed as far as income tax department is concerned, it may not object to this non-compliance because it doesn't come in a way of computation of income. But then now whatever tax audit reports are furnished by us, they are not physically verified initially. So it is not that the assessing officer will verify them. They are first put to the verification by software tools. So in case of software tools, each and every error, whether it is small or big, is comes to light. Say, for example, you are conducting audit of a company, and in case of company, the question number said 9 about this partnership firm, etc. What is the profit sharing ratio? You do not reply anything. If the assessing officer is there, he will understand that this is a company and this is question exclusively relating to partnership. So no need that if it is not answered, doesn't matter. But when it is put to software tool, it will say that question 9 has not been answered. This is incomplete tax audit report. Alongside, other anomalies are also thrown open. Subsequently, assessing officers also verify them. And whatever errors and mistakes are there in the tax audit report, they are reported to the institute. Institute has established tax audit quality review board, and all such aspects which come to the institute are examined by the tax audit quality review board. If they find that whatever objection raised is not maintainable, the report is communication to that extent is ignored. If the errors are minor, like I mentioned that in case of a company, this clause 9 of partnership is kept blank, then it may be ignored. If the qualifications are not very significant, then in that case, advisory is issued to the chartered accountant. And if they are significant, then a disciplinary case also is recommended by the TAQRB. So it is necessary that we have a serious look at our tax audit reports, and particularly indiscreet use of the words nil, not applicable. So you have to consider not applicable where it is not applicable and nil where it is nil. Say in case of partnership where the profit sharing ratios have not changed, it is not that question is not applicable. Question is applicable, there is no change. So likewise, we have to revisit these factors. Then clause 8 asks us under which section the tax audit is being performed. And it was noticed that in case of a company, cooperative society, if the turnover is 50 crore rupees, it is stated that under clause A that the tax audit is being conducted, which says that turnover exceeding 1 crore rupees. But if you read section 44AB, where the fourth proviso says where the audit is applicable under any other law for the time being in force, then in that case, provisions of this section are not applicable. That audit is not applicable. You have to only certify the particulars in Form 3CD. So whenever any entity to which the audit is applicable under any other law for the time being in force, like company, cooperative society, then you are not conducting tax audit under A, you are conducting under this proviso. So you have to make an appropriate selection, and also attention is invited to limited liability partnership. It's not that there is no mandate of audit. There is also a mandate of audit if turnover exceeds the given criteria. So this was observed as far as this Form 8 is concerned. Then coming to Form clause number 13F, or before that, question relating to 48.2, payment to associated enterprises. So there, again, the attention is invited to the importance of a representation letter, because it is noticed that many small and medium firms of chartered accountants are not taking representation letters. And one believes that response to the question relating to 48.2 cannot be given unless you know who are the associated enterprises. Because it is possible that maybe the assessee is a partnership firm from Mumbai. There are 4 partners. One partner is having, say, you understand 4 brothers, but there may be 4th brother who is at a distant place. He is having some enterprises and you are not aware of. So you should not rely on your common knowledge, but you have to take a representation letter, take the list of associated enterprises. Then only you will be able to discharge this responsibility. If per se, if you do it on GK and one or the other entity is omitted, you cannot take a defense that, oh, I was not aware, because nothing prevented you taking representation letter. Even you look at clause F of 13, which asks ICDS policies followed. There, ICDS policies, if you look at the audit under section 44AB is of the books of account, and para 1 of each ICDS states that this income computation and disclosure standard is not applicable for maintenance of books of account. It is applicable for computation of income. And you are asked, what are the ICDS policies followed? You cannot answer unless you take representation letter that, okay, we are going to follow these ICDS policies. Then with those policies, maybe you ascertain the income, or the assessee will ascertain the income. You may examine in an appropriate places. You may give the figures of depreciation, deductions, etc. But while answering that question, it has to be in the form of representation letter, and not only you should answer based on representation letter, but you should also state in your Form 3CA, 3CB that this question is answered based on the representation letter issued, because in a chronology, first the accounts are prepared, financial statements are prepared, then audit takes place, and then computation is made. So while you are doing audit, computation is not available. And since it is not available, you are relied on representation letter. When I'm talking of representation letter, you would also check your files. You are doing audits of your friends, because appointment doesn't come from blues generally. So maybe your friends, then after seeing business relation, having some other friends of that person, you are doing audit for 10 years, 15 years, and you will find to your surprise, in many cases, appointment letter may not be in file. So these are certain procedural formalities or procedural limitations, and these were observed while the cases came before the disciplinary committee. I was member of disciplinary committee for last 3 years. And then I found that there are two set of chartered accountants having the charge of negligence facing the scrutiny or facing the case. One set of chartered accountants will explain us for 2 hours, 3 hours that how they performed the audit, how sincere they were. Even they did not take dinner, just they took pavada and the audit was completed. So that way they were sincerely doing the audit. And there is other set of chartered accountants who will not speak for 2-3 hours. They will talk for 5-10 minutes, but on table, they will place 5-6 files, the audit documentation. There will be appointment letter, there will be audit program, there will be notes on audits, representation letters, extracts of accounts and whatever. So needless to say, before the court, papers speak, not the person. Even if person speaks, it is not considered unless it is substantiated by evidence. And that is a documentary evidence. So we have to tighten up really relating to documentation, because now all regulators are becoming very strict. And being a regulator like NAFRA, they have only job of really examining whether the procedures are followed, whether the standards are complied, and then to take appropriate action against the ring members. In fact, gone are the days where MC or other regulators relied on their departmental officials to find out whether any accounting standard has been followed or not. They had their own limitations. So maybe even if there is some error, it did not come to surface. But now agencies like NAFRA, they're engaging retired professionals who have practiced for 20-30 years and who have done these audits based on Ind AS and of listed companies and others. And having rich experience, they are giving them assignments to examine financial statements and to come out with the limitations in those financial statements. And therefore now we find that in case of Financial Reporting Review Board, whatever complaints are made by NAFRA and other agencies, to an extent, maybe out of 10 complaints, 7 are correct. And out of 10 cases, at least 7 go to the disciplinary committee. So these are not the days where one takes accounting standards or standards on auditing, or even in case of taxation, the provisions of income tax law very casually. And at this juncture, as we know that when the president assumed the office, he said that auditing is a serious business. And really, it has been underlined because of this technological advancement and the actions by these regulating agencies. Then coming next to clause 16D. Clause 16 is any amount not credited to profit and loss account, and D is any other income. In case of this clause 16D, it is represented by many assessees and chartered accountants. Let's say in case of proprietary concern, if savings bank account interest is received, if rent is received, then in that case, it is directly credited to capital account and not to profit and loss statement. And then under 16D, it is reported by chartered accountants. Say the profit as per profit and loss account is 45 lakhs. He is having savings bank interest of 1 lakh rupees. He is having rent income of say 4 lakh rupees. Then this 1 lakh and 4 lakh is reported in 16D. When it comes to computation, he will say profit or business income 45 lakh rupees, add other sources 1 lakh rupees, add income from house property, maybe 2,50,000 rupees after deductions. So he will report income of 48,50,000 rupees. But when the assessment or the intimation is received under section 143(1), he finds that to that 48,50,000, there is again addition of 1 lakh and 4 lakh rupees. So 5 lakh rupees are added, and accordingly he receives the demand notice and everything. The box for the purpose of rectification is not open. Then only a go is to make appeal. So there, whether we should report such incomes under this particular clause, that was the concern, because then this needless procedure is followed. There we examined the thing. With this report, if the assessing officer physically does the 143(1) procedure, what he will do? If he finds that 1 lakh rupees is not included in P&L, 4 lakh rupees are not included in P&L, he will look at the computation of income. And if they're included in computation of income, then he will not take any action. But if it is not included, then it may be a reason to take action. So while making software, the similar procedure should have been, or similar logic should have been incorporated in the processing software. But it appears that this logic has not been incorporated. So whatever is reported there straight away gets added. So a view taken is that there is no error in reporting, there is error in programming. And to that effect, the DTC has already represented the CBDT and they have stated that you amend your program, and also till the date that amendment takes place, whatever adjustments have taken place based on this 16D, you should revisit all those adjustments and give them justice, and also make that 154 box open in such cases. So as far as reporting is concerned, reporting has to continue the way we are doing it. There need not be any shortcut, or we need not ignore, because in some cases it was stated that then reporting this interest, instead of in 16D, let us report in para 3 or 6 of 3CA, 3CB, so that automatic adjustment will not come. So friends, everywhere while we are doing audits, if we keep on looking at conveniences of the assessee and how to keep him away from the income tax department's scrutiny, it is not fair. Because it is not that we are representing the assessee, we are representing the income tax department. Unfortunately, the appointment procedure, the appointment is made by the client on whom or whose accounts we have to report. And therefore, we feel that we are more inclined towards the assessee, but really the assignment comes from the income tax department. And if we employ such tricks so that the assessee is not put at a unnecessary burden as we feel, then in that case, the income tax department may not find any utility in the tax audit report. And if that happens, maybe down the line, the tax audit also will go the way the GST audit has gone. So we have to make sincere attempt and keep the utility of that tax audit report alive. So even if you report, even if addition is made, doesn't matter. There are procedures for the purpose of redressal of grievances. And also, we are also telling CBDT not to make adjustments which are not warranted. But then we have to keep in mind that our tax audit report is found of utility as far as the assessing officers are concerned. Coming to clause 31.
Here the ESIC and PF payment are also being added similarly.
You send whatever issues are there will come, because as far as ESIC and PF is concerned, there were high court judgments. Now the clarification has come. So till the time high court judgments operate, that addition will not be made, but that particular view is not accepted. So prima facie there may be adjustment, maybe one will have to go in for appeal and canvass his case, because the fact that matter has gone till high court, that means that income tax department is not accepting that view, and they feel that their intention was always to disallow. Unfortunately, the words don't match the intentions and court look at words. So they are holding their view. We have to defend the manner given in the income tax law, and the appeal would be the only way to go forward. Then coming to this 31, incidentally, when you are talking about this, at least one change we have made in guidance note, and that is response to clause relating to 43B. So there, if there are any amount outstanding of taxes, etc., required to be reported, but it was noticed that certain amounts may be already reported in some other clause. Say if there is a provision for payment of gratuity to unrecognized gratuity trust, in that case, under section 48(7), that is disallowed. So under section where it asks about 48(7), you will already report, say, 2 lakh rupees provision for the purpose of this gratuity trust. In that case, if that amount is reported against 40A, then again it need not be reported under 43B. That is the view taken in guidance note. And the reason is, if you read section 43B, it starts with the word notwithstanding the method of accounting, if any expenditure otherwise allowable, and then unpaid you have to disallow. So when you are reporting it under section 48(7), that expenditure is no more otherwise allowable, it is otherwise disallowable. So why once again report it? So if we have not said that you must not report, because if somebody reports, let it be there, because it is not also incorrect answer. And if we say that it cannot be reported, then it may be taken as an error and non-compliance with the guidance note. So we have said that you need not report it, with this view that, okay, when mechanically they make adjustment, they first add the figure where it is under 40A7 and again under 43B. So at least in one case, we have taken that view. Then coming to this clause 31. Clause 31 is bifurcated into several clauses. And there particularly clause 31A and B, that is about 269SS, where 269S is about two categories. One is about loans and deposit and one is specified sum. Clause A is loan and deposits, clause B is specified sum. But if you want to calculate the threshold is to be calculated by aggregating loans and deposits and specified sum. In the sense, if the deposit is say 12,000 rupees and if the specified sum accepted is 10,000 rupees, then that limit of 20,000 is breached and you have to report it. Or you have already paid, say, advance for immovable property, say 2 lakh rupees, and then you are giving 2,000 rupees deposit or advance. To that 2,000 rupees also 269 SS is applicable, because in aggregate it is seen, not individually. And therefore, although the questions are bifurcated into A, deposits, loans, and B, specified sum, for the purpose of considering this limit, you have to aggregate. Again, in 269T, you have to carefully read the questions and respond, because the questions, there are two questions from the perspective of the repayment of loan received by the assessee. So where he has advanced the loan and he has received the repayment, then whether it is account banking channels, not, that is asked. And two questions are where he has taken the loan and he has repaid. In that case also, it is required to be answered. At times, it is confused or interchanged, but you read the wordings, because the wordings are payer, payee. So where you receive the particulars of payer, where you give the payee. So depending upon those words, you have to answer. Coming to much debated question clauses, clause 30C and clause 44. Circular by CBDT issued in March 2021 states that these two clauses are in abeyance till 31st March 2022. In some quarters, the question was raised whether 31st March 2022 refers to financial year ended that date or the reporting till that date. The view taken is reporting till that date and not financial year ended 31st March 2022. And the reason is, this is not the first circular, this is the fourth circular. This clause was inserted in August 2018. Representations were made against both these clauses. And then first circular was issued in 2018 stating that difficulties are faced by the stakeholders, several representations are received, and in view of this fact, reporting under clause 30C and clause 44 is kept in abeyance from 20th August 2018 to 31st March 2019. Then subsequent circular was issued in 2019 stating that difficulties faced, representation received, kept in abeyance till 2020, 31st March. In 2020 and 2021 circulars were issued. Considering the advent of pandemic, it is kept in abeyance. So if you read these four circulars in tandem, it means that reporting till 31st March 2022 and not the financial year ended 31st March 2022. So for assessment year 22-23, we have to report these two aspects or these two clauses. Before discussing reporting at ICA, we have made representation for omission of both these clauses. And the reasons are, as far as clause 30C is concerned, it is in 3CD. And if you look at all other questions in 3CD, they are concerning facts or particulars, say figure of depreciation, books of account maintained, disallowance, or any other income. So all are 269 SST. Everywhere facts are stated and you are certifying the facts are true and correct. These questions requires you to take a call whether a particular arrangement is impermissible avoidance arrangement. So we believe that in the mechanism of Form 3CD, chartered accountant is not expected to form an opinion or take a call on a particular issue. He is expected to see that the facts are furnished, facts are appropriate, and it is for the assessing officer to do assessment on the basis of these correct facts. And this not being a fact, first you have to take a view. It should not be included in Form 3CD. And again, your own conduct, that is CBDT's own conduct, supports this view. Because certain other case where such a call is required to be taken, you are not asking chartered accountant to take that call. Under section 48(2)(b), if the expenditure results into payment to associated enterprises, to the extent it is unreasonable, it is disallowed. Tax audit report does not ask chartered accountant what is the unreasonable component of payment. It asks you give list of all payments under section 48(2)(b) and restricting or reserving the right to bifurcate between reasonable and unreasonable with the assessing officer. So everywhere particulars are asked, opinion is not solicited, so you should not do it. Again, in case of particulars, chartered accountant is certifying it as true and correct. Fact can be correct. Opinion need not be correct. It may be acceptable, not acceptable. Opinion is always taken on an issue which is debatable. So this is not an appropriate place for the purpose of 3CD for a chartered accountant to respond. Again, look at your end, how you are processing it. Are you giving assessing officer authority to classify it as IAA? The answer is no. The assessing officer, if he believes that, okay, a particular arrangement is impermissible avoidance arrangement, then he has to escalate it to the principal commissioner or commissioner. Then principal commissioner or commissioner will ask question to the assessee. Do you agree that this is impermissible avoidance arrangement? He may say yes, he may say no. In 100% cases, nobody will say yes. If he says yes, then he has to issue order that yes, this is impermissible avoidance arrangement and the consequences will follow. So in case of no is the answer, then in that case, again, they don't have any authority. They escalate it to the approving panel of 3 commissioners. Then that approval panel will give opportunity of being heard to the assessee and decide whether it is impermissible avoidance arrangement or not. Again, chapter 10A, section 96 text gives definition that the benefit received by all parties who are part of that particular arrangement. So it is not only the assessee. Assessee, he has sold it to other person, he has invested, whatever. So taken together, you have to consider what is the tax benefit. And there is threshold of 3 crore rupees. If this tax benefit exceeds 3 crore rupees, then only this chapter applies. If it is 2 crore 50 lakh, chapter does not apply. It is not, it cannot be classified as such as the IAA. So I, as an auditor, don't have all that paraphernalia information about others, which the commissioner, assessing officer, or the panel would be having. So I cannot take a call whether that is IAA, and if it is IAA, benefit to the group exceeds 3 crore rupees, because I am not privy to the information of that other parties. They are not my clients. And even if all of them are my clients, I am governed by the rule of secrecy. I am doing audit of client A. I can look at only books of A. Even if I have knowledge of B, C, D, I cannot use that knowledge for doing audit of A. So for these reasons, we said that this should not be, clause should be omitted. And as far as class 44 is concerned, under class 44, the analysis of this GST expenditure based on GST registration by entities is asked. So there, as far as this GST information is concerned, it may not be readily available with the assessees. Again, if it goes to the very root of the tax audit under section 44AB, because when it was introduced, the finance minister's speech, the other documents say that number of assessing officers is limited. So in order to assist ascertainment of appropriate income, this is particular tool which is employed. Now, when it comes to payment to registered dealer or unregistered dealer or composition dealer, what bearing it has on computation of taxable income? Because even if you pay to unregistered dealer, it is wholly and exclusively for business allowed. If it is for registered dealer, similarly it is allowed. So there is no utility as far as ascertainment of taxable income is concerned. So to an extent, it is beyond your jurisdiction to ask this question. Again, considering that if that information is readily available in annual return of GST, the due date for that return is beyond the due date of tax audit, and the concepts of this expenditure are different for GST and for income tax. There, even capital expenditure is subjected to GST, advance to professional is subjected to GST, and there are certain items under reverse charge. So it would not be of much utility from income tax perspective. Recently, the CBDT chairman has taken a charge. Therefore, we said that you omit it, and if you feel that you still need to study, for 4 years you are studying, but still if you want time to study, at least for this year, you keep it in abeyance, like you had done earlier. Till today, we have not received the response from CBDT. Also, the draft of this guidance note, along with the covering letter, we have given to all CBDT members. Personally, we had a meeting with CBDT chairman along with president and vice president of the institute. Along with again that covering letter, once again we have given this draft. And in that covering letter, we have not restricted to say, please go through the draft and offer your comments. We have invited attention of all of them, CBDT members, commissioner, the chairman, that there is variation in form between the rules and schema, and we are taking this view. And again, from clause 30C and 44, they should be omitted. We have made separate representation. So your attention is invited to that. And pending your response, we are giving this particular prescription in our guidance note that I will discuss now. So that we have informed the CBDT chairman and all the CBDT members. So now whatever guidance is given in this particular guidance note, there cannot be any objection from the CBDT because they had given ample opportunity. So natural justice we have done with the CBDT. As far as from clause 30C is concerned, we have explained what is IA, how you have to determine, etc., etc. And then it is stated that considering the fact that you may not be having information about all the parties to that arrangement, thereby estimating whether the tax benefit is exceeding 3 crore or not. And again, this is not a matter of audit. It is really requires investigation. And what we are doing is tax audit. So for these reasons, we are unable to express any opinion. There was also one view that we need not give the wordings. But I was of the view that wording should be given in this case because from 1984, the question is asked whether account page was there or not. And we are saying that instrument is not available, I am unable. And now the assessing officers believe that this clause has got this answer only. So likewise, we feel that if everybody writes that there is difficulty, assessing officer को लगेगा कि यही answer देता है ये question का, and they may not go further. So maybe in this clause, uniformity can be pleaded. In 44 also it was stated that you give wordings, but we have avoided giving wordings because there are a variety of situations. In 30C, after explaining that, two situations also we have explained that a particular arrangement is already classified as impermissible evidence arrangement by the appropriate authority. In that case, you may consider whether such transaction pertaining to such arrangements continue, examine them and take a view whether you also believe that it is impermissible evidence arrangement. If the assessee has preferred appeal, if there are some judgments available, you take everything into account and then respond the clause. Don't give a disclaimer blindly. And secondly, if proceedings are initiated about a particular arrangement being IAA, then you also take cognizance of it and then respond to the situation. Whether if you believe that it is IAA, respond accordingly. If you believe that it is not, maybe take representation letter, ask question that why it should not be IAA. Assessee will give you his reasoning, and then if you subscribe to that reasoning, maybe you take appropriate call in your report. So that is also explained in commentary to this particular clause. As far as 44 is concerned, we have explained that, okay, in expenditure, you put expenditure entity, registered, unregistered. Only one additional view we have taken, that if you consider the title is analysis of expenditure of an entity whether registered under GST or not. Then column 1 is serial number, expenditure incurred. Then paid to registered entity, paid to unregistered entity. So this form is using the word entity, using the word person. So person is defined, but entity is not defined. So it is interpreted that entity means business entity. So in case of expenditure, it is not classified by the word entity. So expenditure will include the entire expenditure, but when it goes to analysis, payment resulting to business entity only should be considered. So as far as payments to employees is concerned, employees, workers who are not in business, they are your employees. So that is not an entity, and therefore it need not be classified into registered or unregistered. All those items which are not considered as supply of goods or services under GST law, that also need not be classified. Any depreciation, bad debts, any amortization of expenditure, it also does not result into any payment. So that also need not be classified. So total of payments to registered and unregistered will not match with the total of expenditure. But if they don't match, then you assume that whatever you have reported is correct. If they match, then there is some problem because you have also included depreciation, etc., which is not a payment. And then after having explained how to fill up those forms, if the assessee is not in a position to provide you this analysis, then you can appropriate disclaimer. If the assessee has given any reason that for this reason I am not able to give, say if the assessee is an advocate or a doctor, he is not subject to GST, so his reasoning may be different. If the transactions are voluminous and the assessee is having primary software, it is not attuned to provide this analysis, then such reasoning should be provided. So depending upon whatever reasoning the assessee gives, if he is unable to furnish, you can mention that fact, and if he has given reason, you can mention the reason also. Of course, in certain companies where ERP type of softwares are available, it is possible to have this analysis, and if such analysis is given, maybe it can be subjected to test check, and then the reporting also is possible. In that reporting also, if you feel that, okay, say in case of unregistered dealers or composition dealers, the entire information could not be verified or was not available, maybe appropriate remarks you can place in serial number 3 of 3CR, serial number 6 of 3CB, that entire verification could not be done as far as this particular aspect is concerned. Then at least you have communicated your limitation to the authority and backlash may not come. So friend, these were some of the details about the new developments which the tax audit guidance note has come. In this tax audit guidance note, we have not included any example because at times people try to form principle based on that example, but then there are various issues including this wording of qualification under clause 44. So the direct tax committee has decided to come out with implementation guide on tax audit. Generally, in the implementation guide, there should be 50-100 issues. So if we wait for 50-100 issues, maybe September would be over. So as soon as we receive the issues and we form an opinion at the committee, we will be releasing them one by one without waiting for any volume to be accumulated. So in this seminar or study circle meeting or at any other forum, if you have any issues, you may escalate those issues to the direct tax committee. If you have probable solutions, those also you can send it. These will be considered and released by the DTC. I thank you for patient hearing and thank the study circle for inviting me.
You have made valid representation, though you have not received the official verification. What was their response, primary response?
They said that section 96 is quite clear, you can answer. That's what they said. At that time, that was the first meeting. Therefore, we did not elaborate. We said that you give us appointment, we will come, because two persons were there at that meeting. One is CBDT chairman, and the other is the authority which has drafted this form proceeding from TPL. Sorry?
44, no impact on segment of income. So that also is.
No, they have not responded to that, and we have sought appointment also that we will come and explain our views, but till the date appointment also has not been given.
Thank you, Chital sir. The first discussion, it was on the tax audit, important changes in the guidelines. Our speaker, CA Chital sir, has enlightened us on the each and every important clauses of the tax audit very minutely, and specifically wherever there were the important changes, the sir is tried and cover in a best way. So now, before we have the panel discussion, because panel discussion, it is going to take place very in the around almost 13-14 case studies we are supposed to cover. So it is going to take time. So before we go for the panel discussions, we'll break for the breakfast, and then again we'll reassemble very quickly for the panel discussions. But there are few announcements before we go for the break. Our institute, the Institute of Chartered Accountants of India, is going to conduct the by-elections on 16th and 17th of September 2022, this month. It is only on account of one seat of our Central Council member was vacated because of the unfortunate death of our own member, CS Sunilbhai Patodia ji. And to fill that seat, the institute is going to conduct the by-election on 16th and 17th of September. So we request each and every member to please exercise your right to vote. Please vote in a large number. There are 5 candidates, and whatever ballot numbers are being allotted, so we'll have to assign a sequence to each and every contestant. So, and we also request to please spread this message to your friends and all your relatives who are the member of our institute, so that the voting can be done in a large number. We also at the JP Nagar having the history of almost around 90% voting at each and every election. So we want to maintain that our legacy. So we request all the members to please cast your vote. Now we'll break for the breakfast, and we request all the members to please reassemble quickly once you have the breakfast.